There we go. Okay. All right. So we're going to talk about, sorry guys, this for a little segmented here. Talk about disability insurance. We'll go ahead and get started with what is disability income insurance. So disability income insurance is going to help protect your income. As a realtor, your income is obviously your commissions. If you are unable to work and you are not getting an income, then what would you do if you were hurt or injured? For example, you can use your disability benefits to pay for things like your mortgage, tiny little home there, groceries, or your car. No, I think that might be a Matchbox car. You could pay for your car as well. Hi there, good to see you. Yeah, exactly. So yeah, when it comes to disability insurance, it's a check that comes directly to you to pay bills that can take care of your monthly expenses. There are some terms to know with disability insurance. It is not like other types of insurance. So when you think of auto insurance or home insurance, there is no benefit. What the benefit is in disability insurance is the amount that you are paid on a monthly basis. So this is an amount that you will receive on a monthly basis. Benefit period is the amount of time. How long will you receive that benefit? And there are different types of disability insurance, and we'll talk about that in a moment. There is an elimination period. So an elimination period would be like a deductible. If you have a deductible on your auto insurance and you have a crash, the deductible will be the part that you are responsible for, and then the insurance company would pay for the rest. Well, this elimination period is the amount of time that you would wait before you got your first check from the disability insurance company. And the longer the elimination period, the cheaper or less the premium is on a monthly basis. And then there are riders that can be added. So a rider would be an additional coverage added to any policy. So for example, a cost of living rider. You're going to get a disability benefit of $10,000 a month, but $10,000 a month in 2021 isn't going to pay the same as it would in 2031. So the cost of living rider will give you an additional amount that would go up annually based on the cost of living. There are a lot of myths about disability insurance. A lot of people go, I'm a realtor, there's nothing dangerous in my job, I would never need it, Social Security is going to take care of me. So those are things to think about. Well, the first thing is people say, I would never need disability insurance. Well, the risk is a lot higher than you may think. A 20-year-old has a 1 in 4 chance of becoming disabled between the time he or she starts work and retires. That's a 25% chance of you becoming disabled. That is a higher chance than you dying while you're working. So a lot of people always want to get life insurance. Life insurance is definitely important, but the chances of you dying while you're working are much less than becoming disabled. So disability insurance is very important. Social Security, disability income, it will cover you, but you know, we can see working with the government is not the easiest thing in the world. Everybody who's gotten PPP loans and things like that can understand that. The government, you're going to have to wait to get that disability, usually 3 to 5 months, just to put in the application. And then you're waiting on the government to get the check. Not only that, there are very strict definitions of disability when it comes to where the State Farm disability policy is going to pay you if you can't do your job. So it's called own occupation. If you can't be a realtor, then you don't qualify for the disability benefit. Also, a lot of people say, well, I'm not in a dangerous job. You may say that too as a realtor, but only 5% of the disability claims come from on the job. Much more come off the job with car accidents, illnesses. If you were to get cancer per se, that would be something that would be in disability insurance. It has nothing to do with. So those are the myths versus realities. There's different types of policies. There's a long-term disability policy, just like the name says. It's for a longer period of time. Your options include a 5-year benefit period, which means from the time you started, you will get paid for 5 years, or to age 67 benefit period. If you're over 67, then you don't qualify for disability insurance, because the longest that you can get disability insurance is to age 67. We'll learn if anybody drops off the call that we've got some people over 67. The maximum monthly benefit that you can receive is $20,000 a month in this policy, but it is based on your current income. So you cannot get 100% of your current income in disability, and the reason is if you were to get 100% of your current income, then you would have no reason ever to get off of disability, because you'd be making just as much on disability as off. So that's the reason you get a percentage, 67% of what your current income is. And then once you begin receiving benefits, at that time, State Farm will pay your premiums. So you wouldn't be paying the premiums and receiving benefits at the same time. Whenever you are disabled, you would not be expected to pay those premiums. Those premiums would be paid. And then a short-term policy is a little bit less expensive because it's a shorter period of time. This one, and a much lower benefit as well. So this one has a 1-year or 3-year option, and it has a maximum benefit of like $3,000 a month. So for this, I would say if it's a young person who is a renter and wants to make sure that if they're injured, they can still pay their rent, then this might be a policy that would be a good fit.
Or the mortgage.
Or their mortgage, yeah, or their mortgage. The thing about a mortgage is a mortgage usually lasts a lot longer. Well, the rent always lasts, it's going to last a lot longer as well. But usually renters don't have the same kind of income as usually folks who are homeowners. So, but this is a policy also that is good for someone who just got a car loan. You get a 6-year vehicle loan, and you want to make sure that that $900 a month car payment is paid. You can buy a short-term, a 3-year policy with a benefit of $900. That way, you make sure that if you're injured, that the car loan is paid for. Okay? Also, the same. If you are using the policy and you're getting the benefit, at that time, you would not make the premium payment. State Farm would pay those premiums. It is short-term as well. Yeah, so good question. The short-term policy, you cannot get after the age of 67 as well. So, think about which policy is right for you. Long-term disability with somebody who has probably 10 years or more left on their mortgage. They got school-age children that depend on them. They want to make sure that I just wrote a policy for an attorney who's got 3 kids under the age of 8. So she wanted to make sure that they were taken care of. God forbid anything happens to her. Family, you want to make sure your family can live the current lifestyle that they're living. If you were to become disabled and couldn't work, you don't want kids to have to move out of the schools they're in. You don't want to have to move to a smaller place, move to a worse neighborhood, those kind of things. Those would be reasons to get a long-term policy. As we talked about short-term policy, if you just need to cover certain expenses, like a card payment, credit card payment, those type of things, short-term insurance might be the best for you. Honestly, the short-term policy is much less expensive. It's much more affordable policy. So if there are budgetary concerns, then that would be a good idea as well to get a short-term policy. So those are the short-term and long-term disability basics. You can always give me a call, reach out to me. Google Neal Bracewell State Farm. I'm the only one there. You can find me by cell phone or office phone or email. Anybody have any questions while we're at the end?
So is the premium also determined by your age? Yeah. Yes, you can collect.
Yeah, good question. So we had a question from the huge audience in the room. How is the premium determined? So there is some underwriting as far as your health is concerned. You probably would not qualify for a policy if you're stage 4 cancer or something like that. It is also determined on sex and age. Life insurance and health insurance are actually the opposite. In life insurance, men cost more for life insurance because we're idiots and we usually die a lot sooner than our spouses. And some reason women are more expensive for health insurance. You can figure that as you can, probably because when a woman finds something that she needs to go to the doctor for, she actually goes to the doctor rather than disguise and try and tough it out, which is probably why we got it. So those are some of the premium bases.
So 20,000 is the max.
20,000 is the max.
So it's like for $1,000, say monthly disability.
Premium.
What would the average cost for that be?
Well, it's so hard to say what the average cost of a
Well,
policy would
say
be.
me, a 38-year-old male.
Well, if you would like, we can just pull up a application for Danny right now as we speak. Now, I don't want to do that because it's going to bring up Danny's personal information, so we don't want to do that. But for a $1,000 policy for Danny, Danny is 38. Healthy guy, I would say $1,000 a month, long term or short term?
Short term.
Short term policy would probably be about. So when you think about paying 125,
10% then, 10 to 15% probably.
Yeah, probably about 10% of what your benefits can be. But then, it's also based on, like I said, your current health. It's based on your age and
your income too, right? So
and your income. Well, not really your income. It's more based on the benefit. The premium is based on the benefit. Because you could have an income of $250,000, but you only want, $2,000 a month.
So for $20,000, say it'd probably be like $2,500 a month.
Yes, or maybe
More.
Any other questions? No, you're all good.
And how long is the contract? Is it for like a year or two, or how long would I make those payments?
Until age 67.
Okay, so it's like life insurance. Then. It just goes on.
Yeah, it's like
forever.
life, exactly.
Do you want to do like, how does this compare to like Aflac?
So Aflac specializes in what we would call a hospital indemnity policy. So that's if you're injured, it pays directly to you to pay bills that come up while you're in the hospital, right?
The Mayhem commercial, right?
Yeah, well, no, the ones, so Aflac is the duck, right?
No.
So let's say that you are in a car accident, you're not disabled, but you missed work, went to the emergency room,
We can use my mother-in-law. She had hip surgery.
she had hip surgery.
Yeah, so she's out for 3 months pretty much.
Okay, so,
She's using obviously her vacation stuff, but now she's on disability through
okay,
her work.
so hip surgery would be a little bit different because it's an elective surgery, but if you were injured, let me give you.
Well, she was injured. That,
She was injured.
yeah, that's why the hip broke. That's why she had to do.
Okay, so
She
yes,
fell.
Yeah.
yes, it would pay for that. So, perfect example, I'll just give you an example I had in my office for a hospital indemnity policy, which is what Aflac does. There was a girl that played soccer with my daughter many years ago, 8 years ago, and I wrote this hospital indemnity policy when she was 13 years old. My daughter told me, oh, Jessica broke her wrist snowboarding, 2 weeks ago. This was a while back, but she broke her wrist. And I was like, man, I think I sold her that, I think we did that hospital indemnity policy way back when. We went and looked at it. The policy was still in force, very inexpensive policy. I think her mom pays $100 a year for that policy. But the policy paid her for the emergency room visit. It paid her an additional amount for the surgery, and it paid an additional amount for, she did spend after the surgery 1 or 2 days in the hospital, so it paid for that as well. So she wasn't disabled, but she did collect like $2,500 on that policy for like an Aflac. It's called a indemnity policy. So it pays you when you're injured.
But this is different. This is
different. This is disabled, like a doctor says, Danny, you cannot work on bed rest, right?
So if I signed up for it now, would it stop at 67 or would it continue on?
No, it stops at 67.
Okay.
All right, well, a little bit different than what we normally do. I normally talk about home insurance, but I thought being timely with the situation that we had with a friend of ours, that it's important to be able to talk about disability insurance because not too many people talk about it. This session is recorded, so you guys can go back and look at it or send it to your friends, and send me an email or give me a call if you have any questions.
Thank you,
That's
sir.
it. Thank you.